Welcome, people. Money Max back here. All right. Now, we've had an interesting time on the markets, okay? I wanted to give the end of week review. The reversals are starting now, guys. As you can see, the US dollar has picked up in strength quite rapidly. I mean, even if I go to the dollar index right here for you guys to see, let me switch over and give you guys that look into the market. All right. Let's put this here. So I know it's been interesting, to see the market. I mean, I wish I didn't close USD-CHF. I did take some losses today. I'm still in profit overall though, but I did take some losses today. All right. It was experimentation, if you want to put it that way, if that's even a word. All right. But let's have a look and see what's going on. I'm going to pull up my whole screen here. So if you look at the dollar index, we can see it's very similar to USD-CHF, practically the same. All right. So we've seen some increased bullish activity on USD, on the US dollar right here, which is interesting to see. All right, now the reversals, guys, are about to get kicking. We've come back to this area here, which is a very important one. Now, depending on how the price receives this order block or interprets it now, at the moment, it's a demand zone, which the price has flipped to supply. I'm going to be very intrigued to see what the market really does with this, okay? Is either we're going to go for a very strong short, which means reversals activated, or we should see some continuation long. Now, remember, the structure of price we have, I see the dollar index in the long, if you want to call it short to midterm, pushing very strongly long again. All right. And the reason is, if I come back here, now I don't know why my dollar index looks like this, but we had a reversal signature where we had a wick closure beneath the previous yearly low right here. All right, we've had market structure break already. I was going to say Martin structure break. I don't know what that is, but we've had break of market structure, starting from here of that, bearish structure in the price that we're seeing. We've had a return back down here, which again, if I was to pull up the weekly of USD-CHF, it looks exactly the same. You can see USD-CHF had the exact same reversal signature. We have the same return back now, and now the price is pushing for a massive low, okay? And again, there are institutional order blocks of liquidity that have pushed the price to this degree. And there's also retail stop losses that haven't been taken on the short side. So as the price is moving right here, the decision of what to do is going to be very intriguing to see how the market reacts. Now, I still think there's going to be a short, but aside from what I think, let's make the market decide what we should think. Now, at the moment here, the price has really, generated a short and a long that are both being powerful. But I'm not taking my mind away from the fact that we've had a supply zone on the weekly here, which we've had a clear break of a very clean in this week, but we haven't had the return yet. And so no matter what I see the price doing on the long side, I do think the market is just playing a bit of an interesting game, and that we are going to have a short back down to here before another long. But that long should launch us off into a stronger dollar for the foreseeable future. All right. What's really holding the price at the moment for now is this supply zone area here. Once we break past, and right here, once we break past 94.621, we are really looking for some major movement to happen. Now, the dollar index and the consumer price index, CPI, work very well hand in hand, okay, along with inflation. And you can actually use the dollar index for a lot more than just checking out whether the dollar is stronger or weaker. Now, as we're coming into Q4, the CPI figures, inflation are going to be very important and key figures we need to keep out in our mind. Now, I remember from our teaching from yesterday, well, it wasn't a teaching, but just a talk. All right. If we think about the link between CPI and inflation, all right, I'll just put this here. So CPI, all right, consumer price index, consumer price index. Now, the consumer price index, or CPI, all right, is in essence an index to let us know how much the basket of goods, a basket, I should say, because each countries are slightly different. Costs. Okay. Now, this index gives you the gives a percentage which is calculated in the US by the US Bureau of Information and Prices, which lets you know how much a basket of goods costs. Now, roughly there is different levels of baskets, and some things are excluded because of the volatility it brings to the calculation. But in essence, it is exactly for the consumer. How much does it cost to buy things? All right. Now, of course, if a CPI index number is larger, okay, so increase CPI. So if I put this on the left, higher, kind of reminds me of a show, higher, higher, lower, lower. It's a show by Bruce Forsyth. Remember that show? I don't know if you guys remember. It's a UK show. Don't mind the UK me. For those of you who are not from the UK, may not know that show. Ignore me anyway. If the CPI is higher, what does that mean? All right, let's go back to the weekly, and I'll get some text from here. So if the CPI or consumer price index is higher, it means in essence the cost of goods and services, okay, is more. All right. In other words, another way you can say this, which will be the right way in economics to say this, that is going to require more currency for the same amount of goods. All right. Now, from a nominal point of view, if you're in a business or you have assets or whatever, that means that your assets will get a pump in price or boost in price, because it means, nominally speaking, in terms nominally or in an amount, that's what nominal means. All right. You're going to do well because it's going to cost more currency to come to you in order for that product to be released from your hands. And in terms of financial assets, it's going to cost more. So that means more money has to go into a system, for example, a stock, in order for the price to go up because people want to buy. So that is good for you. Now, on the other hand, okay, if CPI is going up and things cost more, all right, inflation will have to be lower to cancel. We'll not cancel it out, but to balance it out. That's the correct terminology to use. Okay. And so when the CPI is lower, all right, it means it costs fewer current. If I'm put this, probably have to put this somewhere here, all right, because of the space. But on the other hand, in terms of what we have when it comes to the market, is going to require, all right, less currency for the same amount of goods. Okay, so it require less currency for the same amount of goods. Now, if you're on the receiving end of that, in the sense that you're the one who has to take in the money for you purchasing your goods, people are losing out on money because it's cheaper. All right. And if it's cheaper, then they have to balance this out with higher inflation. Why? If interest rates, to be fair, not a higher inflation, excuse me. It's just that inflation, so many eyes, I always say them sometimes. So stay hanging there with me. But anyway, in terms of the interest rate, the interest rates will have to be higher. Now, what does the interest rate govern? It governs how much it costs to borrow money, in other words, or if you want to call it the price of money in another way. So if the cost of goods and services, okay, are reduced and it takes less currency for the same goods, if the interest rates are low, which means that it's cheap to borrow money, which will encourage spending, then that will cause a problem for the long term for the currency, all right? And that will cause a weaker currency, all right? So I'm going to put this here. If interest rates are low, okay, we would have a very weakened currency, all right? So I hope you guys are getting the picture to understand. So for some of you who are traders or aspiring traders who look at the news on maybe Daily FX, FX Street, Forex Factoring, etc., all right, maybe you see the high impact news and you just know at 1:30 something crazy is going to happen. And if it's better than expected and etc., then it's good or bad. But in order for you to be a really good trader, for me personally, I don't think it's enough just to be good at technically. I think you do need to have some fundamental and economic understanding of the price. And this is what I'm here to provide for you. So if we have less currency for the same amount of goods and the interest rates are low, then that means that people can borrow money to purchase these products for a cheaper price, which is a bad thing. All right. So interest rates will be higher when the CPI is lower. All right. It also means that people will be losing value on their assets as well, nominally speaking. All right. Now, the same can be said. So if the CPI is higher, okay, so the cost of goods and services are more or requires, more dollars for the same amount of currency, it increases the demand for the currency. Okay, it does. It will increase the demand for the currency eventually. But For us to work out whether it's going to be a demand, more in a demand kind of market or supply, it would again hinge on the interest rates. So if the interest rates are low, okay, then we'll have higher demand. All right. So there needs to be a balance between these 2 points. Okay. Now, how does this relate to the dollar index? Well, if we have, whenever there's a situation of low interest rates, CPI will have to be higher to balance that out. Now, usually in a financial crash or crisis, so we had 2008 with the financial crisis, caused by the subprime mortgages scam, and then we've had 2020 with the coronavirus. And during that period of time, during the coronavirus period, why are interest rates low? So some of you may have not known why interest rates have just suddenly dropped in some places to zero. Okay, for example, the European Central Bank have had zero interest rates for a very long time. The reason is to encourage spending. Okay, they want money to be spent because spending increases in the amount of investment, and the more investment going in, the more productivity. That means that employment jobs will be created, or more jobs will be added to an existing sector, and possibly even a new sector might be created, who knows? But it kind of cause the system to restart itself for things to keep moving. And so this is why we have low interest rates at the moment. And until COVID is completely conquered and there's a clear strategic plan, interest rates are not going to increase for a while. Okay, but to balance that out, and this is what central banks literally do all day, the Federal Reserve has 900 PhD staff all around America working on making sure these figures are right. That's all they do. Okay, these are the financial tools to be able to deliver, what is good, what they believe is good for the country's currency, for the US country, and for the future of the economy. So if the interest rates are low, there will be a much higher demand, especially for people who qualify to be able to get money out or borrow money and use that money to spend. Now, whether the money is on spending on TVs, which of course is going to not produce more productivity, which you have to factor for, or whether the money from maybe larger individuals and companies will be borrowed to invest in infrastructure to provide more jobs, which will again be a good thing because it would restart the economy. All right. Now, it depends on who's borrowing and what their reasons for. You will get those people who will literally see the interest rates being cheaper and say, okay, I can, use my credit card to buy, I don't know, TV and a PlayStation, which are not going to, I mean, in theory, yes, because, I know you could be a gamer, but I mean, seriously, in a sense that, buying that compared to buying maybe, say, a tractor to do some farming to get more, this is what I'm looking to do. So for me, I'm looking to see what will happen with the price. I'm expecting to see, more, how can I put this? More, borrowing to take place for a while. But from what I've just said, many of the richer people and wiser people who know what the opportunity holds will be taking hold of the interest rates. Now, another point in history we can use as a demonstration will be 2001. Now, in 2001, we had, after what we had with 9/11, okay, which was just a couple of days ago, 20-year anniversary, but after 9/11, the interest rates were dropped drastically due to the effect of it. Now, during that period of time, just after that, there was a lot of weakness in the dollar for the meantime, but many other currencies grew exponentially because a lot of money was being shifted. A lot of dollars were cheap, so the dollars were taken to go and use for other investments, and we saw a lot of growth there. So usually when interest rates are low during these periods, once they start to rise, we see a massive amount of growth or the effects of the low interest rates moving forward. So saying that, when it comes to the lower side of CPI and requires less currency, if the interest rates are balanced out and they're quite high, also it discourages spending, then it can balance out, the less currency required for the same amount of goods. So this is really the correlation we have here. Now, in that sense, if the dollar index is pushing long, okay, or going long, it could be a mixture of these factors. But it is said that most of the time when the dollar index is going strongly long, then it means that the CPI would be following in correlation with that. Okay. So this would be, if the CPI increases, then the dollar index will increase. That's usually what the correlation is. But of course, there are other factors which affect what's going on. Now, why am I saying this in terms of the major reversals? Well, if you look at what we've had on the market, so what I'm going to do, switch back to my funded account, you can see that we've had a very strong break of bullish activity here. All right. Now, we were in the long from yesterday. I gave you guys this long, and the price continued even further than where we expected, which is crazy. All right. Now, my limit here for the long was up to here. Now, this area represents a supply area because the demand zone has been broken beneath and returned to. And if today, and this is the key here for knowing about the reversal, guys, again, if today we have a close outside of this area, then our next target should be back to the 0.94. Okay. And so we can see that the market is really heating up. Well, September is an interesting month because it's the month which is the doorway from Q3 to Q4. And every quarter, there's a shift in money. Each quarter has its own reasons for it. All right. It's in different countries. Like I said yesterday, in this country, quarter two, the shift from quarter one to quarter two is an important quarter. So in March, there's always a lot of interesting price activity that takes place because it's tax season. First month of the second quarter is tax season. So there's always shifts in money that take place. And during April, May, June, the price action is very different from, July, August, September, and October, November, December also has its own perks as well and different price action. So we're in a point of major reversal here. Now, looking at what we have here, we're going to have to wait for the market to respond. I'm looking at pound USD. We had a strong short taking place today, on a different pair. So there's been quite a plethora of pieces of action that maybe have not been the most comfortable. I took some losses today, and I'm honest to say that I'm still in profit on this account because my risk management is always tight. I guess I'll be honest, I could have probably taken less trades, but I just wanted to also test out the market, feel it out to see what's going on. Now, I would advise Friday is probably not the best day to feel out things because you're going to end up feeling it in your heart, and you don't want to do that. And if you don't have the discipline to be able to manage your risk, please don't try to do it or just demo trade. All right. Now, I was in the market, of course, to make money, but I'm just watching carefully to see how things are developing over time with the price. Now, USD CAD probably was another big shocker. We've seen a very strong bullish piece of action on it. To the point that we've seen the price actually come for the high of the previous week at the end of the week, but I don't believe that this bullish run is done. Now, with USD CAD and Canadian dollar pairs, I'm going to circle back for a minute and have a look at this account here. And I'm just going to steal one of the charts here and look at oil. So I'm going to go to oil. Now, why am I looking at oil? Now, again, when it comes to economics, it's good for you to understand what drives currencies, more than just technical analysis. Now, one of the biggest driving factors of a country is if their major export is a commodity. So Canadia's major export, which is oil, all right, is very important in what we're looking at for, price action. So when I look at, this range of price, so I'm going to start from here on the daily. I do believe that oil is going to increase in value. Now, why is this important? Well, because oil's one major exporter of oil, not the only, is Canada. That's its export commodity that it, earns money on, gets more foreign currency coming in to pay for the oil. All right. Primarily will be dollars, of course. But anyway, for Canada, if the price of oil increases, okay, or every time it does increase, most of the time the Canadian dollar will gain strength as a response to that, because it means that the export prices increase, and because of the increased demand for oil, which will in turn mean that they make more money, their GDP goes up, that will strengthen the currency. And so you see this correlation here when if US oil, okay, is going short, okay, USD CAD will be going long because the Canadian dollar will be losing strength against the US dollar in that Forex pair of USD CAD, okay? Now, it doesn't mean the US dollar even did anything, but you can see this correlation quite strongly if you pull up your charts. Now, what I will do, I'll pull it up for you here just for you guys to see and validate what I'm saying. So here is US oil, all right? And I'm going to pull up USD CAD. Where is USD CAD? So I've got another US oil here. Let's pull this along. So pulling up USD CAD over here. Let's put it, scroll up. Here we go. All right, so let's make some space for this so we can have a look. So here is USD CAD. We've just had a very strong bullish run on it. Now, this is, again, the price action we're seeing with USD CAD right now is not the norm. And okay, this pair correlation, of course, no pair correlation is 100%. There are always going to be variations of it. But what I will do, I'll start from the monthly here, or let's go to the monthly here and have a look at what's going on. So if you look at what we had here, I can even start from the coronavirus period. So during this area here, we had a monthly demand order block, which became supply during that period right here, which is what I'm dealing with at the moment. Now we see that if we follow the months, this is January 2020, we had a very strong short all the way down to, according to this chart, $7.56. But for those of you who were around during that time, you know that oil actually went to minus $38. But if we look at the same period of time, we saw that USD CAD did a very strong long before an initial short. Now let's look at when the short was initiated on USD CAD. So if I put my arrow here, the short started really into April, and we've seen the short happen from April 2020 all the way into literally for 13 months until May 2021. We had a very strong short. Basically every single month apart from 2 were bearish months. Okay, we started to see a reversal take place now, which the price is around, doing at the moment. And if we look at this same period of time, let's go over to here. So right here is March, here is April. We see that the price inversely was pushing long, and we've even seen the kind of same bearish. Now here we've had 2 bearish months. On USD CAD, we've had a bearish month and a kind of a pin bar doji looking thing. But the doji is pushed more to the upside, so it's more of a bullish doji kind of candle, if you want to call it that. All right, and we saw 2 bearish months here. So you can see that very, very strong correlation. Then we see from here, November 2020, which is also here, November over here, 2020. We see a very strong bearish drop on USD CAD and a very strong bullish run on oil. So you can see that they have a very strong inverse correlation. Now, recently, they haven't completely done the same correlation, which means that there's US influence going on here. But from where we are, oil to my left here is really bouncing around in one more supply zone. If the price is able to break past this area of supply, then oil should be on its way towards 80 and 86 and even $100. Okay, because from the monthly perspective, there's nothing really on the left. I mean, there is a flip zone here that the price is operating with. So I would give the price a little bit more room to operate. But again, if the price is able to break past this region here of about $78, then really on the left, the next places the price will be going is above $100 again. Okay. And so that means that the Canadian dollar will be gaining a massive amount of strength. I told you guys it's my top 3 that I'm looking at for this year and into next year. All right. So what can we do here now with USD CAD and the movement that happened? I'll be keeping my eyes on oil to see what happens here. I still think that USD CAD has more bullish upside, possibly up to this point right here. Now into the market next week, we do have FOMC news and other things, which we'll go through on Monday, that potentially could also add to the effect of possibly a long before a short, but we will see. Okay, guys, but there is major reversal coming right now. So keep your eyes on the figures, and I hope you guys enjoyed that, and I'll catch you guys in the next video. Have a great weekend, everybody, and take care.